Today, we're revealing the top 10 things the rich avoid investing in. We're not just discussing tangible assets here, but also the approaches, mindsets, and strategies they typically avoid. Now, let's get started. Firstly, let's talk about high-fee investment funds. It's a common misconception that high fees equal high returns, and who better than the wealthy to debunk this myth? Even though they have the means to afford hefty fees, they generally avoid such funds because of their potential to drain profits. Instead, they opt for low-cost index funds or ETFs, which offer broad market exposure, have low operating expenses, and incur low portfolio turnover. This approach ensures their money is working for them, not for the fund managers. Moving on to the second point, investing without a plan. Consider this. Would you embark on a journey without a map or a destination in mind? Probably not, right? The same principle applies to investing. The wealthy always have a financial roadmap that outlines their goals, risk tolerance, time horizon, and an investment strategy that aligns with these elements. This plan acts as a guiding light, helping them make informed investment decisions and keeping them on track towards their financial goals. Our third point is the principle of diversification. Don't put all your eggs in one basket. This age-old wisdom is a cornerstone of any successful investment strategy. The rich follow this principle religiously, spreading their investments across a range of asset classes such as stocks, bonds, real estate, and even alternative investments. This approach allows them to mitigate risk by ensuring that the poor performance of any single investment doesn't drastically affect their overall portfolio. The fourth thing the rich avoid investing in is outdated technologies. As we live in an era marked by rapid technological advancements, yesterday's cutting-edge technology can quickly become obsolete. The wealthy are perpetually forward-thinking, always on the lookout for innovative technologies and sectors that are poised for growth. They understand that investing in outdated technologies can limit their returns and hamper their wealth growth. Next up, at number 5, the rich never invest in things they don't understand. Before we dive into the topic at hand, I have a small request to make. If you're enjoying this video, I'd greatly appreciate it if you could show your support by subscribing to the channel. This way, you'll be the first to know about future content and updates, and it will also help us reach a wider audience. Thank you for your consideration. This fundamental investing principle is shared by many of the world's most successful investors, including Warren Buffett. Regardless of how promising an investment opportunity may appear, if they don't fully understand its ins and outs, they won't risk their money. This approach helps them steer clear of investments that could potentially lead to significant losses. The sixth point on our list is get-rich-quick schemes. These schemes may sound tempting with their promises of immediate wealth, but the rich know better than to fall for them. They understand that building substantial wealth takes time and discipline. Rather than chasing after the illusion of quick riches, they focus on sustainable, long-term investment strategies that have been thoroughly researched and vetted. Coming in at number 7, the rich steer clear of debt-fueled investments. While leveraging debt can sometimes amplify returns, it can also magnify losses. The wealthy understand this double-edged sword, and tread carefully when considering debt-fueled investments. They ensure they have robust risk management strategies in place to handle any potential fallout. Our 8th point is lifestyle inflation. Despite their wealth, the rich do not indulge in unnecessary luxury or let their spending habits escalate unchecked. They recognize that displaying wealth through excessive spending can be a roadblock to wealth preservation and growth. They instead prioritize accumulating and investing their wealth for continued prosperity. The 9th thing the rich avoid is negativity. They acknowledge the significant role a positive mindset plays in achieving success and creating wealth. They steer clear of negative influences, be it in the form of people, environments, or even their own thoughts. They surround themselves with positivity and use it as fuel for their financial growth. Finally, rounding off our list at number 10, the rich never invest in complacency. They appreciate that the investing landscape is dynamic, continually evolving and shifting. They commit to lifelong learning, regularly updating their knowledge about market trends and adapting their strategies as needed. They understand that complacency can lead to missed opportunities or potential losses. And there you have it, folks. The top 10 things that the rich avoid investing in. As we can see, successful wealth management is as much about knowing what to avoid as it is about knowing where to invest. Adopting these principles can help us make smarter investment decisions and grow our wealth effectively. I hope you found this deep dive enlightening. If you did, I'd appreciate it if you could give us a thumbs up, share this video with others, and leave your thoughts in the comment section. We value your engagement, and it helps us produce more insightful content for you. If you're not subscribed yet, hit the subscribe button now to stay updated with our latest financial insights and tips. Until our next episode, here's to your journey towards smarter investing and effective wealth creation.